Hello and welcome back to Property Insights. My name is Mark Ashworth.
And I'm Neil Harding.
And on today's video, we are going to be talking about a market update in the property investing world for September 2025, what's been going on in the market, how things are looking now, and what you might like to take note of for your investing journey. So, interesting source of information from finance from yahoo.com. Interestingly, UK average rents hitting an average high of £1,577 across the country. The highest still in London, of course, at 2,700, unbelievable. But more interestingly, a massive spike in the northwest of the country, average prices climbing 10%. Increasing in 10%. You know, these figures are quite significant considering that, well, obviously the cost of living crisis is helping towards those increases, certainly with inflation as well. But it seems to be that whilst people might not be able to afford stuff, the rents are still going up, or certainly have been.
Double-digit percentage rent growth is, I think, striking, let's say, to say the least.
Because typically you'd expect it to go up in line with inflation, right? Or maybe a little bit above, perhaps? Outweigh it slightly?
Yeah, quite possibly. And I think once you start looking at 10% rent growth, I mean, it really points to something. There's a lot going on behind that. For people that have been watching our content for quite some time now, we've talked at length about how various changes that have been happening in the industry of residential property investing has put pressure on supply and demand, and ultimately ends up with rent increases due to that. And there's all sorts of different reasons behind it.
And I guess it may not necessarily affect those people who have been in long-term rentals, so people who have been in those properties maybe 3, 4, 5 plus years, because it's quite possible that landlords of those properties are keeping rents a little bit lower than the market value. But I think people would be very surprised if they had to move on to find new properties to rent. Certainly some of the stuff that I've got, that I've refurbished and rented recently, have gone out for a higher price for those people that have been in the property for longer. So I do think genuinely good landlords are treating existing tenancies with a bit of respect there as a loyalty discount, if you will.
I think for the people we know, and I think for us, yes. And I think we probably recognise that it's actually, as much as anything else, it's good business sense, but it's also good for tenant and landlord alike to have longevity of tenancies. And an empty property is probably the biggest cost for a landlord. So yeah, I think that makes a lot of sense. And we've spoken before about how we prefer to set rents at below market rent of maybe 5% below market rent, and that encourages longevity of tenancies, which is a good thing in the end, I think, for both tenant and landlord.
So the other thing that we should probably talk about on this market update is the impending Renters' Rights Bill, which is going to be apparently completed by October, November, expecting Royal Assent. What does that mean, Neil?
Yeah, just approved. just approval. I'm not a lawyer.
Boringly approval.
But it's essentially, I think that at that point it's sealed, it's a done deal, but ultimately doesn't become active law until the summer, and maybe June next year, so June 2026. And then, to be honest, I'm suffering from fatigue around the whole area now. We'll probably do some more content when it's actually gone live as a reminder to people of what they actually need to be thinking about. Again, we've done a series of videos previously about things to look out for. But I think for most property investors that take their investing seriously, which will include everyone watching this video, because the fact that you're watching it means that you do. You've probably heard of the Renters' Rights Bill many times over now for at least a year. And I think if anything like me, probably just want the thing to be put in place so that we can actually get on with it.
Angela Rayner has resigned. Well, we don't really need to talk too much about that. Other than the fact that we've now got a new housing secretary, I'm sure he will be just as useless as the rest of them. Let's not get political.
Steve Reed, that well-known household name in the housing sector that everyone knows has championed and spearheaded no end of amazing change that we all know and love. Steve Reed, you know that guy?
I've never heard of him.
Steve, you know Steve.
Oh, Steve. Yeah. Inflation still creeping up there,
so
higher than what the government want, of course.
Today we were looking at the news, weren't we? And inflation had been published, new inflation results. So 17th of September, as the date of recording this. So 3.8% is the 12-month inflation number to August. So obviously higher than 2% Bank of England target. The food price hike that we're all seeing on the food shelves in supermarkets is the main reason apparently behind that. But it's always interesting, isn't it interesting how the timing of these publications come the day before the Bank of England meets to decide what the base rate's going to be. So they meet on the 18th, tomorrow, as the time of recording for us. So so
this video will be out by the time they've done
it will be. So we can now predict, and everyone watching this can tell us in the comments.
Or we could just record another video now.
Wrong would be edit this one. So what do you think is going to happen?
Well, I think the government, the Bank of England, will hold the rates. I think with inflation where it is right now, and I think with the impending loom of the October or November or whenever they're going to do the autumn statement, I believe that it's just gonna hold. I don't really think there's gonna be a movement.
I agree. There was a cut last time, so we're at 4%, right, at the moment, and I think the predictions were in the first half of 2025 that by the time we get to the end of 2025, the base rate would start with a 3, and there would be at least 2 cuts, maybe 3.
Is there another meeting?
There will be.
Yeah, I think it might drop next time.
I think it might. I think there's one from memory. I think it's either the very end of October or November. Can't remember the date. But yeah, there's definitely one more at least this year. And I can see it. If I was predicting at the moment, I'd say probably there'll be a cut there. But we will see. But I think with 3.8% being, I think, reasonably significantly higher than 2% target, I can't see them cutting it tomorrow. I think they'll hold. And I think a rise is out of the question because I think it just sends completely the wrong messages of what they're trying to consistently say for at least the last 12 months now.
So moving on to interest rates for mortgages. Obviously, it's a good idea to have a look and see what the mortgage markets are doing. We've taken a Mortgage Works 5-year fixed limited company buy-to-let, which is now available at
5.27%.
Okay.
Yeah, with no product fee. 75% loan to value in a limited company, available for purchases or remortgage. We like to look at that rate because it's especially the non-product fee product that the Mortgage Works always have available, seem to always have available. The Mortgage Works are quite price competitive, I think, and a big lender. That particular product I always look at as being a decent indicator of the real cost of borrowing money for property investment purposes.
Yeah, what happens is you tend to find that I get emails through from various landlord and investing related companies that often have adverts on there from mortgage lenders spouting sort of 3.5% interest rate mortgages. But they never tell you what the arrangement fee is until you go and look into it further. Yeah. So once you've added the arrangement fee on and then also paid the interest on that arrangement fee, it's not far off of what your interest rate is without a product fee. So it's always a good idea to benchmark that for seeing what the mortgage market's doing. And of course the Mortgage Works typically are probably more geared around lending to individuals. I don't think they're as competitive in the limited company market, but obviously, as we always would say, is have a chat with your broker to see what deals are available. And obviously most people are on fixes and probably moving on to fixes as well. So I remember in the early days of my investing when interest rates were on the way down, variable rates were very, very commonplace. Particularly discounted variables were always really good. I'm secretly hoping that they might start to bring those back, the discounted variable.
Yeah, you like a discounted variable?
Well, just if the rates are on the way down or stable, I think it's, I like them.
Yeah, I like a fix. Give me
Yeah, I
a
know
5-year
you
fix. I like a 5-year fix.
That's only because you don't have to adjust your spreadsheets all right.
So let's look at house prices, the UK's most popular pub conversation topic, probably. House prices. So we've
According
seen...
to statistics, of course.
According to various statistics and sources, which we'll put in the show notes to show where this data is sourced. UK house price index reported 3.7% year-on-year rise as of June 2025. And Halifax indicated 2.2% annual growth to July 2025, with experts expecting a slow but steady climb in prices driven by improving affordability from falling mortgage rates and sustained buyer confidence. Interesting. So falling, I mean, based on what we've just said about what we think the base rate is going to do, will there be much of a fall? Will there be increased affordability and falling mortgage rates between now and the end of the year? I'm not sure if it's going to change that much. I mean, there was a cut in base rate last time. As we know, 5-year lending is based on swap rates, hardly ever moves because it's based on the cost of borrowing over that time frame. 2-year fixed rates get impacted a little bit more by that. But I don't think the cost of borrowing from a bank for a buy-to-let mortgage really moved much at all with that cut, and I suspect it won't move much regardless of what base rate does actually tomorrow. I suspect it will be barely noticeable. But we'll see.
My broker's always going on about the fact that lenders tend to bake in what their predictions are for the future anyway. I've actually got a remortgage coming up on a personal property that I've just been given a Mortgage Works product for 3.67% for 5 years with a 3% arrangement fee. If the Mortgage Works thought that interest rates were going to go the wrong way, i.e. up, I don't think they'd be offering that. I think they're definitely thinking that the rates are going to go down. But how that affects house prices, I mean, you want confidence in the market. I don't really think it's more to do with sentiment than it is to do with the actual rate. So if they bring the rate in sub 4%, I think the sentiment will definitely be improved. And I think it will probably make people a bit more confident about either buying their first home or moving from one to the other. I think what's really going to put people off is what the rumours around mucking about with stamp duty, about capital gains tax on people's owned homes, about this sort of like so-called tax on properties over 500,000 instead of stamp duty, all this stuff that's been going around social media and whatnot. I think really that is what is affecting sentiment, and I don't really think it's got an awful lot to do with the base rate.
Fair enough. Yeah, we'll do a session nearer the time on the budget, the impact of it. But yeah, at the moment there's a lot of rumour, speculation, hearsay, which
turn your social media off.
Can be exhausting to go through it all. But yes, the whole will national insurance start getting applied to rental income is the topic of the moment, isn't it? That's the favourite thing to I see that post on social media a huge amount at the moment.
We're not really fans of talking about rumour though, are we really?
Budget predictions to me just ends up being a whole load of wasted energy.
Yeah, wait till they actually do it and then we'll report on it then.
Yeah.
Thanks for watching, guys. We do hope that you found this video insightful. And of course, we'd love you to subscribe to the channel. That always helps people find this content for their investing journey. And make sure that you like the video too. And we'll catch you on the next one.